What's up, guys? Hope you are well. In this video, we're going to be going over credit basics and why it's so extremely important to have a strong personal credit profile in literally everything you do in your life, but also in everything that we're going to be doing within this program for business funding. Before we hop into the credit basics itself, I want to just zoom out and give you a quick reminder of the program and the process that we're going to be walking through. Guys, first and foremost, most important step is going to be your personal credit optimization, getting your profile to max fundability. It is much, much more than a score, as you will find out. But after you are completely dialed in on the personal side, we're going to be establishing relationships at these tier one banks. And once we have those tier one relationships banks set up, we're going to be strategically approaching them for 0% funding. And then lastly, we're going to be maximizing your funding. So everything that you'll see in Asana is going to be broken out into those 4 different pillars of the program. So before I get into credit basics, I did want to touch base of why it's so important to invest and spend with business credit cards and not invest and spend with personal credit cards. Guys, this may be review for some, but it's extremely, extremely important to know at this point why we're doing what we're doing. First and foremost, the number one benefit of investing and spending with a business credit card is that it does not report to your personal credit profile. That is why all this works. You can invest $50 to $100 to $150,000 at 0% in business credit cards and still maintain an 800 credit score. If you do that and hang those balances on the personal side, you are absolutely tanking your score. Credit approvals. You are generally seeing 2 to 3x the credit card approvals. And what I mean by that are the credit limits. If you're getting $8,000 to $10,000 approvals on the personal side, you're going to be seeing 25 to 30K credit limits on the business side. And who doesn't want higher credit limits? That's what we're after here. You can use multiple LLCs to go after the same card. You cannot do that on the personal side because you obviously don't have an LLC attached to it. But when you have multiple LLCs, let's say 3 LLCs, you could go into that bank and get one business credit card from that same bank with 3 different LLCs. So let's say Chase Business Inc. We want that card. I wouldn't recommend this, but you could get that card for 3 different LLCs. That means 3 fresh 12-month 0% periods. Guys, inquiry removals are very, very challenging on the personal side of credit cards. For whatever reason, they're very, very hard to remove. But when we're applying for our business credit cards, it's significantly easier to remove inquiries with the business credit card side. The minimum payment, this is really not a direct comparison to the personal credit card space, but really comparison to all loans. But your monthly requirement to these banks is going to be 1% of your total balance that you have. And that payment is going towards the balance. So that's not going to be paying some interest down at all because, again, they're 0% interest cards. So it is very advantageous. Let me move myself over real quick. It's very advantageous to invest and spend with a business credit card because of the 1% monthly liability. Liquidating a credit card is a fantastic strategy on the business side because, again, it doesn't report to your personal credit profile. But if you were to liquidate a personal credit card, you are just asking to tank your score because, again, those balances are reported on your profile. Last but not least, you do not need a business to get a business credit card. You just need an LLC. What I mean by that is you don't need an employees. You don't need a website. You don't need flyers. You don't need you don't need revenue. You don't need income for the business to get a business credit card. You just need to have an LLC set up with the state, registered, and go apply with the EIN. Any income that we're going to be reporting is going to be projections. So just wanted to do this as a brief overview of why we're doing what we're doing. So another reason why we're doing what we're doing is because your personal credit profile literally impacts every single aspect of your entire life. So the top most known ones are going to be lending products. Obviously, if you have a lower credit score, you're going to have higher interest rates when it comes to credit cards, personal loans, car loans, mortgage rates. You're going to be paying more. And when you talk about these longer term loans, such as car loans and mortgage loans, even a 0.5 to 1% difference in an interest rate is going to be thousands and thousands of dollars over the life of that loan. So lower credit score equals paying more money with lending products. Additionally, you're going to be paying more money in utility bills. Believe it or not, your phone bills, your energy, your gas, those utility companies will look at your credit profile. And if you have a score that is very, very low, they could ask for a deposit just to get your business. And then they could be charging you more monthly because you have a lower score. So we're even talking about utility bills having an impact if you have a lower score. Job applications. I did not know this, but employers actually pull credit often. I think it was like 4 in 10 times a business will actually pull your credit. And if you have a low credit score, they may not actually give you a job offer because of that. Lastly, kind of a funny one, but also really not a funny one, your love life. So there was a recent study done with bankrate.com, and they surveyed folks, and the results were 6 in 10 folks actually said they would not date or partner with somebody that had significantly lower credit. So kind of a funny thing there, but your credit score could impact finding the love of your life. So lastly, relatively obvious, is your personal credit also affects your business fundability. So that's going to be everything that we're going to be doing. So the higher your personal credit scores are, the more your profile is more fundable. We're going to be getting higher approval odds on the credit cards, and then also higher credit limits for the 0% cards, guys. So extremely, extremely important to dial all of this in, and this is where we're going to start our entire program. All right, so diving in a little bit more detail here, what are the different credit scores? You've probably heard of these, but I just want to highlight them. So we have the Vantage score and the FICO score. The main difference here is that Vantage is free most of the time. FICO, you could probably score a free report from time to time, but generally you have to pay money. The huge thing to remember here is that the FICO scores is what the banks actually look at. So they're going to be looking at your FICO 8 score. So that is going to be a score we want to monitor. You'll see that I'm going to request your Vantage as well, just because it's free and easy and quick to get. I'll be requesting that from Credit Karma, but we also want to monitor your FICO score very, very closely because they do have different accounts for some of these. So FICO could have 20 accounts, and then your Vantage could have 15. So these two profiles don't exactly match all the time. But both of them have a range of 300 to 850, and anything over 720 is considered excellent. That's going to be what we're going to be shooting for. I see most people walk away from this program from having an 800. So my goal is to get you guys over an 800, and just know that everything that I'm going to go through in this slide deck is going to be fixable. So everything on your credit profile is fixable. So what are the 3 main bureaus? So we have the Vantage and the FICO scores, but the 3 main bureaus are going to be Experian, TransUnion, and Equifax. Key thing to know here is that they each have unique credit profiles for you, similar to Vantage versus FICO, but Experian could have 15 accounts. TransUnion could have 12. There could be hard inquiries on your TransUnion and hard inquiries on Experian. So that is one thing we're going to really monitor throughout this process, is what banks are pulling which bureau. I'm getting a little bit ahead of myself here, but just know that when you go and apply for a business credit card, a bank is generally only going to pull your credit profile from one of 3 of these bureaus. So and when they do that, you get a hard inquiry, but it's only a hard inquiry on that bureau. So you could have 5 hard inquiries on Experian, but 0 hard inquiries on TransUnion. So that's why we need to monitor each one of these as they're your own score, really. So before we do any applications, we want to check with each one of these bureaus what your hard inquiries are, what your scores are, and make sure everything's looking good. Where can you access your credit profile? So we have 6 different options here, and they all have unique characteristics about them. I'll just fly through them, but Credit Karma is going to be the free and easiest. You're going to get Equifax and TransUnion. It's going to be free, but it's going to be a Vantage score. Experian, TransUnion, and Equifax.com. They're all very similar. You're going to get a free FICO score, but you're only going to get a free FICO score from that actual bureau, obviously. So Experian is only going to give you Experian for free. TransUnion, only TransUnion. Equifax, only Equifax. And the last 2 are some aggregators. So these are sites where you could create a profile and actually download all 3 scores from each bureau, right? So Credit Check Total will be free, and it's a FICO, and it provides all 3 bureaus. So that's a good one. And then My Score IQ, $35 a month. Very, very accurate. We love My Score IQ. It will provide all 3 bureaus via FICO scores. Again, that's what we're going to want to monitor. Speaking of your FICO score, here are the 5 main factors of your FICO report. So these are going to be broken down by buckets, and you can see on the screen the different weights of those said buckets. So most impactful to least impactful goes as follows. Payment history, 35%. Amounts owed, 30%. Credit history, 15%. Credit mix, 10%. New credit, 10%. We're going to dive into each one of these right now. So payment history, again, 35%, massive, massive, massive bucket here. It's essentially telling the banks if you are paying your bills on time. Tells them if you're risky or not. It is the most important factor of your FICO score, and anything along the lines of missed payments, derogatories, collections are going to fall into this bucket and will be a huge, huge factor for you guys. I have a client who we were getting ready to apply for an American Express card, and I go, let's pull up your FICO just to double check your scores. And he unfortunately had a missed payment from his mortgage lender, and his score dropped 100 points. And guys, we're going to have to then go into credit repair. Credit repair can take upwards to 8 to 10 months and a few grand to get that missed payment off. So it is extremely, extremely important to keep your payment history 100%. I have it on the intake form, but make sure you are setting up auto pay for all of your accounts, all of your personal accounts, all of your business accounts, all of your loans. Everything needs to be auto pay 100% because this is the most important factor of your score. And then I have a little action step. Again, set up auto pay. If you miss a payment, you're going to call the bank immediately, ask them to remove, and there's a bunch of other stuff we could do there, but just know that let's not get to that point. Let's set up auto pay on every single card and accounts that you have. All right, the second biggest factor of your FICO score is going to be amounts owed. That accounts for 30% of your score. This is your total debt, your total DTI, debt to income, and it is heavily weighted with your credit card utilization, your personal credit card utilization. And your credit utilization, if you're not familiar, is the percentage of available credit that you are actually using. So for example, if I have a $50,000 card that has a $50,000 credit limit and I have 25% debt, your utilization is at 50%. Having a high utilization such as 50% will negatively impact your FICO score pretty drastically. And the funny thing to know here is this applies on a per card basis as well. Very important thing to know is that you want to keep your utilizations below 10%. I have that down here, below 10% on a per card basis. So overall utilization, under 10%, but also per card, 10%. If you have overall utilization at 10%, but one card is maxed out, it's going to affect your score exceptionally more in the negative way than if you just have every card at 10%. So let's shoot for that. Eventually, we're going to want to shoot for 0 because, in my opinion, what we're doing, there's no need to have any personal credit card debt, guys. We're going to want to navigate all of that debt to the business side. Really, the perfect number from what I've heard is 2%. So having a 2% utilization could theoretically give you your highest score. But I recommend anything. Let's start with anything under 10%. Then we apply and then get it to 0. Let's just keep it simple like that. Okay, we have credit history. This accounts for 15% of your overall FICO score. So the longer your credit history, the higher your score will be. There are 3 factors into your credit history. So just think of these as 3 different buckets, accounting for 33.33% of your overall credit history. That's going to be the age of your oldest account, the age of your newest account, and then the average age of all of your accounts. So we're going to want to try to get over 5 years of age on your credit profile. And it's important, the importance of starting early, and do not close accounts, guys, unless I recommend that we could potentially close a newer account. But once it gets over 2 years, I would probably keep that card on your account. If you have age under 5 years, reach out. We'll get you set up as authorized user that will help your credit history. All right, so the last bucket here is actually split into 2. It's going to be total accounts on your FICO profile. So again, split into 2. 10% is going to be the credit mix. That is the different types of counts on your profile. So you're going to want to have a diversity of accounts. So you're going to want to have credit card accounts, loans, mortgage loans, car loans, personal loans, various different loans on your profile. And additionally, you want to have a mix of lenders and have that diversity of lenders, diversity of accounts. Last bucket here is going to be new credit. That's 10%. And that is how many new accounts that you have. And more importantly, how many recent inquiries that you had. Inquiries are heavily weighted in the last 6 months. So if you have inquiries in the last 6 months, we could go and remove those. I generally recommend 3 inquiries or less before you apply. So if you're in the 4 or 5 inquiries on a pure bureau basis, then we may want to remove those inquiries before we go ahead and apply for new accounts. But just know that each one of these buckets can be improved strategically and quickly. So just stay positive there. What can we do to maximize your credit profile? There is a lot that we could do. As you can see, I have tossed in a decent amount of action steps, but what my job is to do is to look at your personal credit profile and get it fine-tuned for maximum fundability. So this is what I will be doing. But what I need from you is to absolutely hold off on opening any new accounts. Do not add any hard inquiries, guys. Do not do anything to pull your credit while we're going through this process, please. Set up minimum payments for all your cards. So set up auto pay on all of your cards. I would recommend to actually line up your statement dates. So all of my cards are on the 22nd. So I know around the 15th that I'm going to go in and take all of those personal cards down to 0% because I don't want to report a balance because, again, having utilization is a huge factor in your credit score. So do all of these tasks and then check out Asana for more. But that is how we can maximize your personal credit profile. Here is an awesome chart of what a potential problem would be on your profile and what the solution is. I won't go in through into each one of these, but just know that if you have one of these problems on the left, we could potentially look at the solution on the right to get it repaired, get your score up, and to get you to maximum fundability. Okay, guys, so next steps here is please complete the client intake form 100%, upload the FICO report into Asana, and then enroll into all the bureaus directly so we could track your profile and then open up a Credit Karma profile. So hopefully this was helpful. Let me know if you have any questions, and look forward to getting you guys extreme amounts of business funding. Thanks.